Why is cash trash for billionaires? Have you ever wondered why people like Jeff Bezos, with a net worth in the hundreds of billions, don't just have a gigantic swimming pool of cash? The answer is simpler than you might think, and it's a secret that can change your financial life forever. Stick around, because by the end of this video, you'll understand the fundamental difference in how the wealthy view money compared to everyone else. Let's start with a basic question. If someone gave you $1 million right now, what would you do with it? Many people would say they'd put it in a savings account. It feels safe, right? It's there when you need it. But for a billionaire, putting $1 million or $1 billion into a simple savings account is like watching it melt away. The single biggest enemy of cash is a silent thief called inflation. Think about it this way. What could you buy with $100 10 years ago? A full cart of groceries? Probably. What can you buy with that same $100 bill today? Maybe half a cart, if you're lucky. The piece of paper is the same, but its purchasing power has been drastically cut down. That's inflation at work. Every single day, the cash sitting in your wallet or your bank account is losing a tiny fraction of its value. Over a year, that adds up. Over a decade, it's a significant loss. For the wealthy, whose fortunes are massive, this effect is magnified 1,000,000 times over. Leaving billions in cash would mean losing millions in value every single year without doing anything. It's financial suicide. This is why the wealthy rarely hold large amounts of cash. Instead, they hold assets. What's the difference? An asset is something that has the potential to grow in value or generate income over time. Cash, on the other hand, is a liability in the long run because it only depreciates. Let's talk about depreciation in a way we can all relate to. Picture this. You've just bought a brand new car. The second you drive it off the lot, its value plummets. In that instant, it might lose 10, 20, or even 30% of what you just paid for it. It's a depreciating asset. It loses value over time. The same goes for that new smartphone. The day the next model comes out, yours is worth significantly less. Luxury clothes, fancy gadgets, most of the things we associate with being rich are actually liabilities that lose value. The wealthy might enjoy these things, but they don't park their wealth in them. So, if they're not holding cash and they're not piling up on things that lose value, where is all their money? It's working for them. Their wealth is invested in assets that grow. The most common one is stocks. When Jeff Bezos's net worth is cited, it's not his bank account balance. It's the value of his shares in Amazon and other companies. These shares represent ownership in a business. If the business does well, grows, and makes more profit, the value of those shares increases. His wealth grows without him having to lift a finger. It's like planting a tree. You water it, care for it, and over time, it grows and produces fruit year after year. Holding cash is like taking the fruit from one harvest and just letting it sit on the counter to rot. Another powerful asset is real estate. Buying a property in a growing area can be a fantastic investment. Not only can the property itself increase in value over time, that is appreciation, but you can also rent it out to generate a steady stream of income. That rental income is cash flow, money coming into your pocket every month. It's another example of your money making more money for you. The wealthy also invest in businesses, either by starting their own or by investing in promising startups as venture capitalists. They are putting their capital into ideas and teams they believe can create something valuable. If the business succeeds, their initial investment can multiply many times over. They are essentially buying a piece of the future. This brings us to the core mindset shift. Most people work for money. The wealthy make their money work for them. It's a simple concept but profoundly powerful. Your job provides you with an income, which is your primary tool for building wealth. But if all you do is save that income as cash, you're fighting a losing battle against inflation. The goal is to take a portion of that income and convert it into assets that will grow on their own. Think of your financial life like a farm. Your salary is the harvest you get from your labor. You have two choices. You can spend the entire harvest, enjoying it all now. Or, you can take some of the seeds from that harvest and plant them. Those seeds will grow into new plants, which will produce their own harvest later on. If you keep planting some of your seeds every single time, you will eventually have a massive field that produces a huge harvest without you even needing to work anymore. That's financial freedom. The seeds are your investments, stocks, real estate, your own business. The harvest you spend is your lifestyle. So, how can you start applying this billionaire mindset, even if you're not a billionaire? It starts small. You don't need millions to invest. Thanks to modern technology, you can start investing in stocks with as little as a few dollars. You can buy fractional shares of companies like Apple, Amazon, or Tesla. The key is to build the habit. Consistently setting aside a small amount of money to buy assets is how you start planting your seeds. First, you need to understand your own finances. Where is your money going? Create a simple budget. It's not about restricting yourself. It's about being intentional. Once you know where your money goes, you can find areas where you can cut back a little to free up some cash for investing. Maybe it's one less dinner out a month, or brewing your coffee at home. Every little bit counts. Next, educate yourself. You're already doing that by watching this video. Learn about different types of investments. Low-cost index funds are a great starting point for beginners. An index fund is like buying a tiny slice of the entire stock market. It's diversified, which means your risk is spread out, and historically, the stock market as a whole has always trended upwards over the long term. Don't be afraid of market fluctuations. The stock market goes up and down. That's normal. The key is to think long term. Billionaires don't panic and sell when the market dips. They often see it as a buying opportunity, a chance to buy more assets at a discount. If you believe in the long-term growth of the economy, then short-term volatility shouldn't scare you. Let's recap the billionaire playbook. 1. Avoid holding large amounts of cash because inflation will eat it alive. 2. Understand the difference between assets that grow in value, like stocks and real estate, and liabilities that lose value, like fancy cars and gadgets. 3. Consistently convert your income into income-generating or appreciating assets. Make your money work for you. 4. Think long-term. Don't let short-term market noise distract you from your long-term goals. This isn't about becoming Jeff Bezos overnight. It's about adopting a mindset that builds sustainable, long-term wealth. It's about shifting from being just a consumer to becoming an owner. Every time you buy a share of a company, you become a part owner of that business. You are literally buying a piece of the system that generates wealth. So, take a look at your own financial situation. Are you building a pile of cash that's slowly losing value? Or are you acquiring assets that are working to build your future? The choice you make today will determine your financial reality 10, 20, and 30 years from now. It all comes down to one simple question. Are you planting seeds or spending your harvest? Let me know your strategy in the comments. I'd love to hear what you're doing to build your future. Thanks for watching, and if you found this valuable, make sure to like and subscribe for more insights into how to build real wealth. See you in the next one.